Hi guys, today I had the pleasure of sitting down with Mr. Royston Low, who up until recently was the regional head of private investments at BNP Paribas Private Wealth Management. I've had the privilege of knowing Royston for just over 15 years, and we called him at this very salient moment where he's about to embark upon the next chapter in his career and his journey. We talk about how he did a master's in cell and molecular biology through to working in the government with A-Star to having a really flourishing career in the private equity and private banking space. It was a great chat, and I hope you enjoyed the discussion as much as I did. Cheers. Good morning, Royston. How are you?
Very well. And how are you?
I'm brilliant. I've just recently renovated my house, so this is the first podcast since we've done it, so welcome.
Thank you very much. Thanks for having me here.
Well, we've known each other for a long time now, 15 years, but for those that may not know you, can you be kind enough just to introduce yourself and what your career history is in a couple of paragraphs?
Oh, sure.
Please.
Well, let's put it this way. I'm unemployed in between jobs right now. So I was, and it's hard to say this because I was the head of private investments for Asia at BNP Paribas until recently. And I've been doing that for a very long time. So private investments have been my focus for the last 18, 20 years or so. But I started out mostly as a researcher, and it's going to be a very strange jump, and you'll see that going forward. But it's been an evolution in terms of how my career has progressed. So I guess we'll talk about that a little bit as well.
Well, one of the things that I find most fascinating about you that not everyone might know is that you've got a master's in cell and molecular biology. Yeah? How on earth did that, we'll talk about your transition later to private equity, but what were your interests back at the day in school?
Well, it's strange in the sense that I was never the maths whiz, so biology was something that I was pretty good at. A lot of it was kind of memory work, rote learning.
Yeah. And you grew up where in Malaysia?
I was born in Malacca, but I grew up mostly in Johor. So just across from Singapore. And that's kind of the reason why NUS made a lot of sense, right? It was closer to home.
Yeah, it's huge. So you were good then and you thought, okay, first degree, this is what I want to do? Or did you fall into it?
Well, I had options in the sense that I had places in Malaysian universities, but they didn't give me what I wanted, which was related to biology, and NUS did. So it kind of made the choice a little bit easier for me.
Okay.
So, and then when it came to actually deciding what my major was, Cellular Molecular Biology was new. I think I was the second batch that the university offered it.
Wow.
So it kind of felt a little bit unique and kind of falls into my strengths, I would say.
But did you think, okay, this is what I'm going to do beyond my degree or my master's? Like, what was your job going to be? Or you weren't sure at the time?
I always thought I was going to be a researcher.
Okay.
But kind of things didn't really pan out that way.
Well. So firstly, what is cell and molecular biology for those that don't know?
So cell and molecular biology is essentially the study of what happens in your cells, right? So how genetics, how proteins are made, basically the inner workings of the smallest parts, the cell in your bodies.
Okay. And then you went on to NUS as a research assistant, straight through. Were you bonded?
Yes, I was. So again, I was rather fortunate because being Malaysian, I had a 3-year bond that I needed to serve in Singapore.
But they're brilliant though, right? Because hopefully it means you get a job, right? And you got that job for that 2 years.
Don't promise that to you.
Oh, really?
So you have to go and look for it, right? So it's not a given.
Okay.
But like I said, I was a little bit fortunate. I did my bachelor's, I did my honors, and then my supervisor who was looking after me for my honors degree said, would I be interested in doing a PhD with him? So at that point in time, I said, look, I have a 3-year bond. I wanted to get this out of the way as soon as I could. And he tried to do something for me and suddenly it worked out. So he kind of employed me as his research assistant. But at the same time, I was enrolled in a PhD program. So that suited me quite well.
Okay.
Because I had kind of like the best of both worlds, right? When it suited me,
Yeah.
I could be a staff.
Yes.
And when it suited me more, I can also be a student. So it worked well.
So why didn't you continue and decide to finish the PhD?
Thinking back, I think that was, I don't know whether it was a good or bad decision.
Yeah.
But, I started that program. It was supposed to be a 5-year program. And after 3 years, it kind of got a little bit monotonous,
Yeah.
repeating experiments over and over again, washing test tubes every day.
Yeah.
And I think, again, I appreciated at that time my supervisor. I went to him and said, look, I think it's time for me to do something different. Can we change kind of the terms that we set out? And he kind of agreed. And that's kind of how I walked away with a master's in Cellular Molecular Biology.
Wow. Listen, we both got kids, and one of the key things I always think about is at what point do you find out and discover what you want? For a lot of us, it's much later on. You were saying your kids seem to have known from an early age, but I think the point is things do change, and that's going to be the narrative of our conversation, how we evolve, and you've had major changes in your career. My wife, when she embarked upon doing her PhD, the bond was for 5 years, and I think it was like $456,000 because I was the sponsor for it, and I said, you better finish the bond. You know what I mean? So it was full on.
That's what I'm telling my son. I says, look, he wants to do medicine, right? So it's not an easy course. It's also a 5-year course.
Yeah.
And I basically told him, look, I don't want you coming to me in year 3 and says, Dad, I want to do something different. I think it's a waste of your time. It's a waste of your resources.
You need to be all in for the long haul.
Absolutely.
Yeah. And the sad thing is, I was reading an article yesterday, funny enough, about doctors in London and how much they earn. Or how little they earn.
A lot, I think.
I mean, you could earn more money if you work 60 hours a week in McDonald's, which that's literally, they did the analysis, and I thought that's ridiculous, right? So sad, they should be rewarded, especially after they put so much hard work in, right? So, okay, so research assistant, and what were you doing during that time? Were you doing other work other than acting as a researcher? Were you doing project work?
Well, again, I was very fortunate. So my PhD research project and what I was doing as a research assistant kind of merged quite well together.
Okay.
So I wasn't doing twice the amount of work. Maybe it was 1.5 times.
Okay.
So that really helped. And it kind of allowed me to figure out what I really wanted to do at that time. I think it's very different today, right? I think kids today, when they decide what they wanted to be, they knew very early and they kind of worked towards that.
Yeah.
I think in our generation, it was a little bit more flexible. We really didn't know what we wanted to do.
We didn't have access to all the information they have. When you really look back at it, like you could go online now and you could find out within 5 minutes, what does that look like? Whereas, who would we reach out to, right? Do you know what I mean?
Absolutely.
That's fascinating. And then, so I'm curious, when you then were thinking, okay, I'm going to leave this industry and go on to do something new, how did that come about?
Well, as I left, or I was thinking of leaving, I needed to find a job. So the easiest one that came to mind was, as a research assistant, basically what you're doing was that you were doing research, but you were also managing the lab. And therefore, you were applying for grants to get funded. Right?
That was the genesis. Okay.
Kind of. So, one of the things that I was looking for was the flip side of that, meaning to say that, given what I know and what I've learned applying for grants, I could very well be well equipped to evaluate grant proposals coming from the university. So that is when I decided, or rather I found a job at that time was called the National Science and Technology Board.
That became A-Star, right?
That became A-Star, yeah.
So hold on, I'm really curious. So did you speak to anyone about, this idea that you had, or you pretty much decided, look, this makes absolute sense, I could transition to this?
I think I could transition to it. Then the question was whether I could get a job there,
Yeah,
right?
yeah.
So again, I was pretty fortunate that things kind of fell in place.
How did you get the job? Did you know somebody, or you just applied? Or?
Just applied.
Wow. These things, if you think about it, if that hadn't happened, and you got turned down a few times, your career could have been completely different.
Absolutely. Like I said, I think my involvement in private investments, private equity, all started out because I was at NSTB.
Yeah.
At the right time, when the government wanted to do something a little bit different.
Yeah. So interesting. And what do you think, I mean, we'll come on to this a little bit later, but what are the skills in particular that you picked up during your time at NUS that could be plucked and used transferably?
I think attention to detail.
Yeah.
I think, like I said, when you look at what you're trying to do in terms of molecular biology, you're looking, like I said, at the smallest elements that's happening in the cell level,
Yeah.
right? I used to joke that it's also what you do with your fund managers when you're evaluating them for due diligence, right? You put them under the microscope, you dig as deep as you can, and you try to figure out what drives these people and what makes them successful.
Yeah. I bet if you told the fund managers your background and you told them that, they would probably get a bit nervous, right? Thinking, I'm going to go through the ringer. But you're absolutely right. It makes perfect sense. So in terms of your first job with what is now A-Star, what were you doing? Were you specializing in any particular area?
So given my background, I was tasked with basically approving grants so A-Star had two divisions. One was for the public sector and one was for the private sector. So I was part of the public sector group that was looking at giving out grants, mostly to research institutes within NUS. And like I said, given my background of how I had to apply for some of these grants, I was well placed to kind of evaluate, are the costings right? Are they kind of exaggerating the costs when they put in the grant proposals and things like that? So I was responsible for basically funding some of the research that was happening mostly in the life science institutes.
Okay.
Like the Institute of Cell and Molecular Biology, for example.
Okay. And it's fascinating because I've done it myself, but when you go from one side of the table to the other side, I think it's interesting, but there's a natural, transition and an appreciation, right?
Absolutely.
Some people forget though where they come from, and I always don't understand that. It's like, no, it should work hand in hand. And then tell us about your journey beyond that. So what happened after that? Because you were with those guys for a couple of years.
So I was there since 98, and I think somewhere in 2000 there was kind of a shift. I don't know whether you remember, but there was a big shift towards what they call technology entrepreneurship. And that's when the government decided that they wanted to create more. I don't know whether you remember this. There used to be a very well-known company called Creative Technologies.
Of course.
Right? They used to make the best
huge
sound cards.
Yeah.
But it was a Singaporean company.
Yeah.
And the government wanted to replicate that. So one of the ways that the government thought was needed in order to replicate that or to have more technology companies starting out was the ability to get funding. So venture capital became very important. And at that time, there wasn't a lot of venture capital or private equity available here in Singapore. So that is when the government decided that they had to play a kind of a catalytic role to develop that industry. And they created what was then known as the Technopreneurship Investment Fund. That was initially a $1 billion fund, and then subsequently increased to 1.3 billion. And the goal was basically to catalyze the formation of a venture capital industry in Singapore.
Wow. I didn't know that. I didn't know that that was the history behind it. And who were the guys that were running that? Were they all from the public sector? They were from the government?
Initially, it was mostly coming from two parts, both from the government, obviously. One was NSDB, because they were kind of like the stewards for technology. So they were given the role of kind of evaluating what was coming in to the pipeline, right? And then because NSTB was not a money manager, they also brought in GIC to help oversee so that there was a rigorous process when we were looking at fund managers.
So interesting. And then I guess with your background, learning about how these organizations worked in terms of its R&D and technology, that must have been fascinating for you because you're getting to look underneath the hood, right?
Precisely. So I think it's interesting as we evaluate some of these managers, we get to look at what their prior investments or their current investments are. And it kind of helped because I was focused mostly on the life science or biotech type of funds. Therefore, we could look and where the terminology and the lingo kind of helped as well. So it allowed me to better understand what these fund managers were investing in and the directions that they were headed to. So it was really useful.
So TMF, how long were you there for?
TIF, you mean?
TIF, sorry.
Yeah, so the unit within NSTB eventually evolved into a subsidiary of the Economic Development Board called TIF Ventures.
Yes.
So I was there for probably about 8 years or so.
Wow.
And that was eventually the firm that managed the entire TIF funds.
And then what was your journey to moving into banking?
Oh, well, again, it's purely by accident. So if you look at it, I mentioned that fund was meant to play a catalytic role.
Yes.
Right. So over the next 8 years, since 2000 to about 2008 or so, we managed to invest, I think my memory fails me, but I think we did about 120 odd funds, 80 odd managers, and we managed to deploy the full $1.3 billion.
Wow.
And then we went back to the government and says, look, we needed more money.
How was that received?
Well, it was then that the government decided no. They thought that the catalytic role was successful because during that time, more players came to support the industry. So the endowments started to invest in private equity. The insurance companies started to do that. So again, they felt that catalytic role was no longer necessary. So kind of resulting in the disbanding of TIF Ventures. So we were kind of like one of the first few fund of funds, definitely in Singapore, maybe even in Asia.
Yeah.
And then kind of the group kind of broke up. So I had an opportunity to move, at that time was to ING Private Bank.
Yeah.
Because
So Renato was running, he was the CEO.
Absolutely.
Yeah.
So again, he was probably one of the first few banks that kind of offered private equity to their high net worth clients.
It's definitely, I think it was the first from memory. No, it was definitely up there, right?
Very early on.
Very early on. And you were based, I remember, in Republic Plaza.
Absolutely.
Yeah. So you joined them, and what was the setup? Were you a one-man band at the time?
No, we were part of the funds team.
Okay.
Basically offering, besides mutual funds, we also had private equity offerings. And I kind of helped run that setup together with my bosses at that point.
And then OCBC acquired ING.
Yes.
And then
They renamed it Bank of Singapore.
Yeah, Bank of Singapore. Yeah. And then how did your role change and evolve during that time?
No, I think
It didn't.
It stayed mostly the same. I don't think it evolved much at all.
Because my memory was when I first met you and we were engaged to help hire you, so I placed Agnes, was there really weren't many players out there, and you ticked all the boxes. And then ironically, some time after I placed you, the head of HR globally for Bank of Singapore was an old client of mine, introduced me to Mark Vanderwall. And I thought, I better disclose that I moved, because if he found out later, he'd be upset, right? And actually he said, look, that was a great appointment, It was sad to see you go. But 15 years later, almost, right? So tell us about your journey with BNP Paribas. You've gone through many iterations. Your role really evolved, and you grabbed that business and you transformed it. But tell us a little bit about that journey.
Well, I think when I first started out at BNP, and again, thanks to you, I managed to move there. The role was actually a much simpler one. We were doing maybe one fund a year. It was really niche. But what happened over the next 15 years was it kind of grew. So we were doing initially one, then it became two, and I think now we're talking maybe 5 to 6 funds a year. So it became a fairly substantial business within the bank. And it became also more important to kind of offer more than just private equity. So we transitioned to private real estate, we transitioned into private infrastructure, we offered private credit, and even more recently, impact funds we thought was more interesting. So basically, we transitioned to offer more and more of what institutional investors were already investing in, but targeting, again, high net worth clients that had the appetite, that had the knowledge, that wanted to have a higher return than what public markets could offer.
Just digressing a little bit, I'm curious, why do you think all private banks are structured a little bit differently? So, for example, in a lot of private banks, the alternative space was always fragmented. So you might have real estate parked under somebody else, private equity under somebody else, and they've consolidated. In some banks, I find that alternatives report into managed investments, and in other banks, it's the other way around. Why? So for BNP, your function looked after everything except for, I believe, hedge funds.
That's correct.
So why do you think it's always different?
I can't speak for other banks, but I think for BNP, it kind of evolved quite naturally. So when you placed me there, I was part of the funds team.
Yes.
Right. So it was mutual funds plus alternatives. As like I said, it was niche, and therefore it was parked under that. And then as it kind of grew, I think it made more sense to have a standalone, and then slowly build out a team from there.
What I liked about helping build the platform with BNP back in the day was there was no nepotism, and it was really about assembling a team, hiring the best in class from different organizations, and they brought with them all the good, the bad, and the ugly that they'd learned from their previous experience. Do you know what I mean?
Absolutely.
And then talk about the transition, because I've moved people from, for example, investment banking into private banking, and I always say, look, guys, you've got to understand there's a very big difference. When you're dealing with people's personal money, you have to have a white glove service, but how was the transition for you when you first moved to private banking with ING?
I think it was a learning curve. I think dealing with high net worth individuals is obviously very different than dealing with institutions.
Yeah.
Right. But I think I enjoyed the role because it kind of, again, gave me the best of both worlds, right? On one hand, I was still dealing with fund managers, which was what I was familiar with.
Yeah.
But it also, on the other hand, gave me a way to kind of interact with high net worth individuals. And that varied considerably, right? In terms of their knowledge, in terms of their sophistication. So it kind of allowed me to grow a little bit as well in that sense, because it allowed me to talk about different things at different levels, depending on the sophistication of the client.
So in the last few years, just give us an overview of your role. Like how much of your time would be, actually doing the research, looking into, raising funds, speaking to clients, bankers. I'm curious how your role evolved.
I never really thought about it in terms of quantifying it. I think BNP had a very good platform where there's a central team that was sourcing most of the time. And also gave me some flexibility to select some of these funds that are a little bit more suited to the Asian clientele.
Yeah.
So that was great because I like dealing with fund managers. I think there is value knowing what funds are out there, what their strengths are, what are they focusing on. And at the same time, private equity is a long game, right? When you sell a fund, well, it used to be kind of a 10-year close-ended vehicle.
But what is it now then?
Well, with the advent of evergreens or semi-liquids, right? So they're trying to replicate that in a vehicle that provided either monthly or quarterly liquidity. So it's a game changer in my view, because it makes access to such instruments more accessible to a wider audience.
Just on that, I'm just curious. Because when you got involved in this, it was so new, the reception from the private bankers must have been a little bit different to what it is today, right? Because now they're probably very excited because for me, it's the sexiest asset class out there. But I remember back in the day, that wasn't the case, right? And you were probably having to really educate them and sell it to them and what the benefits were.
Absolutely. I think it's still difficult today, right? Like I said, generally, I think for close-ended vehicles, the 10-year structures, it's still a challenge to get relationship managers, to get clients to buy in to such a long-term investment.
Yeah.
But as you said, I think, when you open up the newspaper today, a lot of it is a lot of acquisitions, a lot of transactions happening, mostly in the private space, right? So it kind of helps that awareness is more available today than it did, let's say, 15 years ago.
Do you think it's important that top down, from the CEO down, that they share a narrative internally, that they incentivize the bankers to consider this as an asset class?
It obviously helps.
Yeah.
I think if you include that as a KPI for a relationship manager,
Yeah.
then there is more reasons to do it. But I think I've been fortunate enough that enough relationship managers buy into the premise that this private assets or private investments will generate a superior return.
Yeah.
Given the characteristics.
And I'm sure the end clients, they're highly sophisticated, right? So, this will pique their interest anyway.
A lot of these clients, remember, are entrepreneurs themselves.
Yeah.
Right. That's how they make their money. Right. So they understand what private equity can bring.
Have you guys ever analyzed that? Like, what percentage of the client base are entrepreneurs? It's a chunk. It's a big chunk.
More anecdotally than real live data. I would say maybe 50-60% will be entrepreneurs. I mean, this part of the world.
Yeah, for sure. So, you've had exposure to private equity all over the world, US, Asia, Europe. How does your approach on investments and dealing with the fund managers vary according to the region?
I think the regions are different in terms of its characteristics, in terms of where they are in the cycle, right? I think the US is clearly the leader, and Europe is probably not far behind, and then Asia kind of follows that. But then if you look at each region on its own, it's again very different. The US is kind of a homologous market, right?
Yeah.
And then in Europe, you have, even though with the EU and everything else, it's still rather a fragmented market. And in Asia, it's completely fragmented, right? Different geographies, different population, different languages, different cultures. So I think when you talk about private equity, we need to be conscious of how we look at the manager's investment focus, right? Are they more export-oriented, or are they catered towards the domestic markets? I think that's a very important distinction.
Were you allowed to roam freely, or did you have a penchant for the Asian market specifically?
Well, again, given my background, I tend to focus, when I was with TIF, right, we focus across all three continents, basically. But I think at BNP,
by the way, I don't know if the background drums will be picked up, but we'll still keep talking. All right? Yeah, we'll be okay. Because these mics are pretty good. But for those that can hear that, that's the Chinese New Year drums. It's not for my household, though. It's on the street. But as you were saying, sorry.
Yeah, so I think it's a little bit more interesting when we look at managers looking at Asia, because there's always a home bias. So clients in Asia tend to focus, or they want to invest in things that they are more familiar with.
Yeah, for sure.
So therefore, there's a home bias. And like I said, I was fortunate enough to say that, I could not say dictate, but I could offer certain things in Asia to our clientele.
Yeah, it's your home court, right? So what are some of the emerging trends that you've seen here in the last couple of years?
I think generally, the couple of things that I favor more of today than I did probably a long time ago was infrastructure. I think infrastructure, there is a clear need for infrastructure, both in the developed markets as well as in the emerging markets.
What do you mean by infrastructure?
Well, again, that's kind of evolved over time, right?
Yeah.
Infrastructure in the old days is a power plant, an airport, or a toll road, right?
Yeah.
I think these days, when you talk about infrastructure, it can be very diverse. It can be about telecommunication towers. It can be fiber optic networks.
Yeah.
But more importantly, it can be data centers. I think that's probably one of the most lucrative sectors
really
in infrastructure that we are looking at.
It's so interesting because that's why when you said infrastructure, I mean, I remember when I went to watch the Olympics in Brazil, in Rio, they were literally laying down the road. They didn't have any infrastructure. And I saw some pictures of it recently, and it was like all that's just gone to waste. Whereas when we saw the Paris Olympics, they had all that there. And my wife deals with cables beneath the seabed, right? Which is what Facebook, Google, these things are so interesting. When you think about things like co-investment, right? I think it's a very powerful tool. If you're going to a private banking client and saying, look, we're co-investing in this deal, we've got money on the table as well. What's your take on co-investment?
I think co-investment, I think a lot of our clients want or express that they want co-investments. I think in reality, it's more difficult to execute.
Why? Just so we understand.
Yeah. So when you talk about co-investments, you're investing alongside a fund manager, right? If you're going to offer it as a co-investments, the ultimate investor that you're offering it to needs to be able to react pretty quickly, right? There is a timeline in terms of how the deal closes, and you don't have months to do that. So in terms of reaction time, I think a lot of high net worth clients are not able to react quickly enough when offered a co-investment. And then on the other end, at the banking side, on the bank side, right, you have to screen them. You have to do a little bit of due diligence on them as well. And that also kind of shortens the time frame for when the deal can be closed with the clients.
So in your role, like loosely, what are your KPIs? Like, how are you measured in your role? Is it like how much money you're raising, the funds? What is it?
I think it's a little bit qualitative and quantitative. I think from the qualitative side, it's a little bit more about, how much do we raise on a yearly basis?
Yeah.
How much revenue are we generating from those?
Yeah.
But from a qualitative standpoint, it's more about performance. It's more about how our clients are happy with the service that we are providing in terms of after sales.
Yeah.
I think that's pretty important because,
of course,
you sell someone a 10-year life fund, you need to be able to provide the after sales after you have the client has already signed on.
Yeah.
Right?
I think having a client for lifetime is everything, right? To really look after them, and you're a long-term person, so am I.
I used to think of it this way, right? So imagine if you were a private bank client, right?
Yeah.
You had 70, 80% of your business in the public markets, right? The fixed income, the equities, and you had maybe a small allocation to alternatives or private assets, right? From a banking perspective, do I want to jeopardize that relationship with you by offering you something a little bit more niche, but potentially could turn sour and risk that 90% of the business the bank was already having?
Of course not.
So obviously there's going to be some more conservative, I would say, selections when it comes to fund managers.
And is 10% on average the normal percentage?
I think it's quite a wide range.
Yeah.
I would say there are still people that have zero.
Yeah.
I would say probably a majority would be somewhere between 5 to 10%.
Yeah. Same for DPM probably as well, right?
Absolutely.
Yeah.
And then what is interesting is that the advent of family offices, where they do have kind of a long-term outlook, there I think the allocations tend to be a little bit more aggressive, 20%, 25%.
So you saw the rise of single family offices changing your portfolio of business, I'd imagine, quite a lot?
A little bit. I think we're still at the cusp of that inflection point, right? Singapore is now attracting quite a fair bit of family offices. A lot of them are still, I would consider, still family run.
Yes, very much so.
But more and more, I think we're seeing the beginnings of professionally run family offices. I think that's an important development.
What would you say have been some of the major challenges for you to manage a portfolio of private equity and real estate funds when you look back at things?
I think the biggest challenge, is cash flows, right? It's very difficult to predict when a fund manager is going to call for capital. It's also very difficult to predict when they're going to make distributions back to you. If you were an institution, I think it's very easy to manage the cash flows because you would have, pots of money lying around. But if you were an individual investor, I think it's very unlikely that you're going to set aside money to cater for capital calls. And therefore you want most of it deployed, right? So having access to cash flows, I think, is a little bit more difficult at the individual level.
Did you have to meet the bank's top private banking clients and sit down and talk about private equity?
Yeah, of course.
But when you speak to them, and what I mean by that is, I know you speak to them, but when you speak to the top ones, the top clients that part money with you, do you try to rationalize things? Or is that what the banker does?
No, I think, again, it's a bit of a simplification. It's a balancing act. I think it depends on the level of sophistication of the relationship manager.
Yeah.
In most times, I think they kind of whet the appetite of the client. And then that's when I come in.
Okay.
But it varies from RM to RM, I would say.
Yeah, for sure. When you're approaching, looking at tech companies for investments, right? And you're looking at the tech sector in particular because it's changing so quickly. What are the key things you're looking out for?
I have to say, I think there are limits to someone who's kind of sitting two steps away, right? We will never know what technologies are at the forefront and which are the ones that are going to succeed.
Yeah.
So our approach is a little bit more, I would say it's a little bit more like, if everybody's rushing to find gold, let's be the ones that provides the picks and the shovels. I think that's a safer way to kind of play that kind of investment themes.
Yeah.
Because, talk about AI, right? You don't know who's going to be the market leader at the end of the day.
Well, look what's happened this week. It's been crazy.
Absolutely. Right. You have so many competitors that are vying to be number one. OpenAI, Anthropic, you name them, right? So rather than play or try and pick a winner there, I rather pick the people that are supplying, for instance, the chips to these people.
Yeah.
It's a little bit easier to make sure that whoever becomes the winner, they're still going to need all those.
The chip game changed this week big time, right? But it's...
Well, again, innovation always changes the things, right?
It's madness. But if you go back to your time with creative technologies and you look at how things have evolved, it's like, can you imagine what it's going to be like 20 years from now? It scares me. I just think I rewatched Terminator thinking this is not too far-fetched, right? Who knows where this is going to go?
Or Star Trek, or Star Wars.
Yeah, it's mad, right?
So it boils down again back to infrastructure, right? So if you look at the AI game, for example, what are the picks and shovels?
Yeah.
Right? A pick and shovel is basically data centers.
Yes.
And energy. It's interesting that if you talk about energy generation, electricity generation, I think over the last 20 years, we had an annual growth of maybe 2 to 3%. So it's been very stable in terms of new energy generation. But with the advent of AI, you're going to need a quantum jump in terms of new electricity.
Yeah.
Right? I don't know whether you know this, but for example, when you do a search on Google and you do a search on, say, ChatGPT, the amount of power that is utilized is very different.
What X is it for AI? A lot more?
10x.
10x. Wow.
So if everybody is moving towards asking things on ChatGPT,
why is it so much more?
Just the amount of computing power that's needed.
Yeah.
To process those large language models, right?
Wow, that's fascinating. So that's
kind of the reasons why I think power generation, which is infrastructure, data centers, which is infrastructure. I think that's going to be a very exciting and it's not something that there is a lot of, right? So again, demand is outstripping supply.
It's interesting. One of the things that is central to your job is risk and managing risk. How did your time at TIF and with the National Science Technology Board really shape that?
Well,
because it must have given you a grounding and foundation, right?
Of course. I think it's been the same throughout that time, right? Essentially, we were investing or recommending other people with other people's money, right? So that there is a fiduciary duty that comes with that, and that's also, personally, it fits my profile as well. I'm generally risk adverse. I rather look at downside protection rather than miss a little bit on the upside. I'm prepared for that trade-off.
Yep.
So I think being conservative and BNP as a bank is generally very conservative.
It is.
So it kind of suits what we were trying to achieve.
For sure. I think, well, look, there's a lot to be said about being conservative and safe because, when there's another financial crisis, BNP no doubt will stand strong. And you can see that in the longevity that you've had in the organization, right? Actually, when I was reading some of the comments, you're clearly going to be missed, when you did your LinkedIn post. Were there any tears? Did they have a farewell party for you?
Yes, they did. It was interesting. Again, I contemplated doing something or having ChatGPT write my farewell.
Oh, really?
I did.
Did you put it in, though? And see
No,
what
I
came
did
out of
not. I think at the end of it, I think that's something that
Straight from the
even
heart.
today, ChatGPT cannot replicate. I think that emotional aspect, the connections, even when you're writing something down, cannot be replicated by AI.
What's interesting, I just did this for the malarkey of it. I wrote into ChatGPT, which is my favorite child. And it kind of told me off, like saying, look, a better way to look at it is what each child brings to you. But what's scary is it had a profile on my kids based on whatever information's in my phone. That's scary. Yeah. So it was spot on. And I can see it, how AI is going to become a friend to people if it hasn't already. You know, if you sat there and you want some amusement and you type some things in, the reaction that you're garnering from it is really immense.
It's amazing. I think, like I said, from our generation to our kids' generations, I think my daughter does a lot of things from ChatGPT.
Yeah, and think about this from an educational perspective. How do you manage that, right? Because kids are jumping on it all the time. So it's bananas. So you had a farewell do. What did you guys do? Did you have a drinks or a dinner?
We had a drink session after work.
Good man, as it should be. So let's talk a little bit about the qualities. Given your extensive experience with institutional fund managers, what qualities do you look for in them?
I would say it's kind of boring. It'll always be the same. I think the first thing you look at is the track record. The second is probably the alignment of interests.
Yeah.
You want to know that when something goes wrong, your managers are going to get hurt as well. Right? And then 3, I think it's like I said, it's always boils down to a people business, right? We need to know what their motivations are. We need to know what their strengths are. We need to know what they're trying to achieve. What are their goals? So those are probably some of the more important features I would look out for when I'm looking at managers.
What do you think are some of the common pitfalls that people should avoid, when dealing with private equity? There's a lot of misconceptions out there about the asset class.
Where to start?
Just a few points, a few insights.
No, I think private equity or private investments, like I said, I think people need to understand it's a long game.
Yeah.
Right? You don't create value overnight, and you don't see value erode overnight either. So I think people need to understand that you need to give the managers time to create value, right? 2, I think it involves around volatility, right? This is where the asset class kind of helps with someone who has a very good portfolio allocation or balanced portfolio allocation. It basically reduces the volatility of the overall portfolio, and at the same time, it increases the performance of the portfolio. I'm very, very clear that if we look back at all the clients that do have private investments in their portfolio versus that don't, you will see those performance and volatility.
How do you balance the governance, risk versus generating a yield or a return for the clients? Because that's got to be a main challenge for you, right?
At the end of the day, like I said, we would have to rely on the managers that we picked.
Yeah.
Right? Because we're not managing it ourselves.
Yes.
So a lot of it is part of the due diligence, right? How good is the manager? How repeatable has the manager delivered over time?
Yeah.
Right? I think in private equity, for example, what is interesting is that if you were a top quartile manager before, the odds are that you will be either first quartile or second quartile manager in your next successor fund.
Really interesting.
The reverse is true. If you were a fourth quartile manager, you are not going to jump and become a first quartile manager overnight. So I think a lot of it is the skill sets that tends to be repeatable from one fund to the other, right? So that's kind of the reasons why track record really matters.
It does, for sure.
And then who delivered that track record? So I think today, particularly in Asia, you see a lot of professionals or fund managers, they move, they spin out, they create their own funds.
Yeah.
So a lot of times that track record, if you look at that institution, the people who generated that track record is no longer there anymore.
Yeah.
I think that's something that you need to be very conscious of.
Yeah, it's interesting because when we place senior people, always look at their tenure. And, you know, there are people that maybe start a race but don't finish it. And if you look at what in our business, so let's say a banker, you know, if they move every 3 years, there's a problem, right? You know, there might be 1 or 2 times where there was a buyout, change in management. So when you're making decisions and you're processing how to do that, what are some of the critical factors that you're looking at that are not so obvious? Like you've mentioned things that to me are clearly obvious, that make sense, but there are other little factors that you're looking at. Like, do you say, okay, I think we should be looking at this particular industry sector?
I think that's kind of the difference that the bank brings, right? In the sense that what we do is both a top-down screen as well as a bottom-up screen. So I think there are thousands of funds that are trying to raise funds every year, right? So what the value add of a bank that brings is that it looks at, you know, in this particular environment, what are our top themes that we believe will make money, right? And then from the bottoms up is finding the best managers that play into those teams, those sectors, those geographies that we have identified.
Have you seen the regulators' influence over governance change everything in your world in the last few years? And if so, how?
I think private equity industry has been extremely stable over the last 20, 30 years.
Yeah.
I'll give you an example. I think management fees hasn't changed a lot over the last 30 years. Carried interest has not changed over the last 30 years. You remember, if you know carried interest, right?
Yeah.
It's the performance fee over a hurdle rate. And typically the hurdle rate is 8%.
Yeah.
Right? That was a term that was started in the late 70s, early 80s. And you know the reason why it was 8%?
Why?
Because 8% during that time was considered the risk-free rate. It means if you did nothing at all together and just parked it in a treasury bond, you would make 8%, right? So if you, as a manager, cannot deliver something above 8%, that means you're adding zero value. And therefore you should not be remunerated for it, right?
I love that. I love the fact you know the history behind it, because it is interesting.
But if you look and fast forward it to today, over the last 5 years, interest rates was effectively zero.
Yeah.
But the hurdle rate has always remained 8%. Right? So
what I've learned about fees is very rarely can they go up. They can go down. I don't know if you've experienced the same.
Well, I think as the industry evolves, you know, it's very different. You know, if you're a manager managing 500 million and you were charging 1.5%, and today you're a manager managing 20 billion and you're still charging 1.5%, I think the economics has changed. I think there needs to be some sort of a fee reduction to reflect that.
When you look at the outlook, you've seen a rise in the secondary private market space. You know, what do you think's been the key behind that?
Well, again, it boils down to what I mentioned earlier, right? Capital calls and distributions. So for a lot of institutions, what they commit to happens to be what distributions are coming back to them. Over the last 2 to 3 years, I think there's been kind of a slowdown in terms of distributions. And as institutional investors, they need to continuously commit into new vintages. And if they can't do that with money coming back, or if there's no money coming back, then they need to create some sort of a liquidity event. So that's kind of the reasons why secondaries kind of evolved and has grown over time. It just gives you a way out of something that generally locked in for 10 years.
Do you think that private banking will spend more time and money in developing the private equity space? Because like I said to you off camera and you laughed, I said, you're one of the OGs of the space, because there was hardly anyone back in the day when I first met you. And it's progressively evolving, but do you think it will evolve a lot more in the next 5 to 10 years?
I think so. I think that allocation to private investments, if nothing else, is only going to go up.
Yeah.
Right? Think of it this way. If you look at the public space, if you look at S&P 500, for example, right? In the early 2000s, there were about over 8,000 plus public companies that you could invest in. Fast forward to today, there's less, or maybe just under 4,000 companies. So basically what it means is that your choice has kind of dwindled over time as companies stay private longer, as private equity actually take private some of these large public companies. I think that means that, again, a little snippet that a lot of people don't know is that, over 85% of companies that make 200 million in revenue are private. So
I didn't know that.
So if you were playing in the public space, you are missing out on a lot.
For sure. That's such an interesting statistic. I didn't know that. Wow. I'm just curious, right? So when you look back at your career, because I'm speaking to practitioners that are either trying to enter private equity, private banking, transitioning to do different things, what would you say is important when doing that due diligence? Because you've made very timely decisions. You may have not, wasn't always by design, right? As you said to me, but what do you think is key when making those decisions? Because I feel a lot of people get boxed in, right? So you've been in this very comfortable position for close to 15 years now, right? And you decided to move on. But what do you think is key when making those decisions?
I think you need to be happy in what you're doing, right? Mm-hmm. I think for the longest time, I was comfortable doing what I do. Mm-hmm. The opportunity to continue to keep learning was also important. Like I said, moving from private equity to private real estate to infrastructure, that kind of helped grow the skill sets as well and not be stagnant, right? So I think opportunities to grow and learn new skill sets, I think it's important. I think not many industries allow you to do that.
Yeah.
And the other one, I think, is that private investments, I think this is the time for it to shine. I think there's a lot of demand for these type of expertise. Yeah. But again, there's not a lot of supply. So it's a great way. I love to be in this kind of dynamics. It's what I look for in businesses and investments as well. When there is demand and less supply, it just means that that's more interesting space to be in.
That's the place to be in. Because I think it takes a lot of courage to because I speak to a lot of senior people, and what's surprising is they say that they're too comfortable, right? And I always, one of the questions I always say you should ask yourself is, in 10, 15, 20 years' time, if you were to look back, what will you regret not doing, or what will you regret doing, right? And then sometimes you've got to shake things up a little bit, right? And I find that this is the key. So I don't know if I told you this, and you're a testament to this. Just over 90% of the people we've ever placed, I've placed in the last 18 years, are still working where I placed them, right? So Agnes was with the bank for 15 years, almost 15 years. But I think the key is when someone takes on a new role, the element is new. There should be something new. There should be an upward trajectory or a greater bandwidth, because that will preserve the person in that role, and they won't become, a little bit jaded or bored. I think that's the key behind it.
Absolutely.
Now, let's talk a little bit about, you've had some great bosses and mentors. What are the qualities that you've learned from them that you can pass on and share with us?
No, I like I said, I always come back to this people thing. I think as my bosses, actually many of my bosses throughout the years has helped me is that, they basically taught me how to basically do, fight the battles that really matter, right? Don't sweat the small stuff. I think working in a large bank, you have many, many different stakeholders, right? You can't please them all, but at the same time, you need to have a very good working relationship with all these people. Otherwise, it kind of jeopardizes what you want to do going forward. So I think people skills are very, very important. And I'm glad that my bosses, past and present, have been very, very appreciative of letting me kind of run things the way I want to. Yeah. And only step in as and when is really, really needed. Yeah. I think there's a lot of trust there, which I really value.
Well, I think the other thing is, though, one has to be confident enough to take on a problem and own it, right? And run with the project, because a lot of people don't. And I think as a leader, that's key. I'm just curious, right? So when you've sat down with key stakeholders in the business, how do you do it? Do you walk the floor? I know that you have to make regular presentations, but like, how do you go and reach out? Because a lot of people that come to me and say, well, look, I'm not getting enough FaceTime. So I always say, well, do you want to pick up the phone and invite somebody for a coffee or a drink? And a lot of people say to me, it's not that easy to do. And maybe because I've just learned in my job, don't be afraid, just do it. And you'll be surprised that if you invite somebody, like you're here today, you've been kind enough to do this, and it's not something you probably would have been up for necessarily. But how do you deal with that stakeholder management?
It takes a lot to get me up on a Sunday morning to come and do this.
Thank you. I appreciate it.
No, I think it's kind of a motto of mine. It's like, if you never ask, you'll never get.
Yeah.
Right? So what's the worst that you can get if you ask for something?
Yeah.
The answer is no.
Yeah.
Right? If you never ask, you're never going to get it anyway. So I see no downside in asking.
Yes.
And I really appreciate, again, my bosses that I had, is that they have been very supportive. They've always made time, even if it's a few minutes, just knocking on a door, and I have this problem, can you help me with this? Or what do you think I should do? I think they've always made that time.
Talking about asking, I always say this, and it's because I remember the day that I realized this, that, I moved to Singapore in 2001, and it took me 7 years to learn that yes was often no. Because growing up in London, no was a resounding no with a kick in your backside, right? It was a very obvious...
It's a cultural thing.
It's a cultural thing, and I didn't know. So I have learned since then how to bring no's forward. It's okay that it's a no. But the other thing I've also learned in business is never to accept a no from someone who can't truly say yes, who can't say, this is all right and we'll sign off on it. And that takes a little bit of time. And the other thing I think that you've done really well is building champions in different pockets of the business, because it always helps if you have a godfather or godmother in the business, but if that person leaves, you unequivocally need to have multiple champions and key stakeholders in the business. Talk a little bit about how do you balance your working life, being a dad, to now two adults, running a successful business. It's not easy. What's been the key for you?
I think for me, it's been establishing boundaries between my work and life.
How do you do it? I'm curious.
Well, it helps that I'm in an industry that is not so one transactional and doesn't change. Does it matter if I answer an email an hour from now or a day from now versus some of the other asset classes where, timing really, really matters, right?
Yeah.
So it helps that I'm in such an industry. It just means that when I leave the office, I can afford to kind of switch off.
Yeah.
I will occasionally look at the emails and see which ones are really critical. Otherwise, it's something for tomorrow.
Yeah.
So I think that really helps, being able to kind of create boundaries between work and life, and being in an industry where it's not life and death if I don't answer an email within the next few minutes.
Yeah. Well, look, that's interesting. And I think the other thing is, for what advice and insight would you give to young professionals that are embarking upon either a career in private equity or in private banking or both?
I think you should start small. I think get your foot through the door. Don't get discouraged if you're doing kind of menial tasks. When I was an MD at BNP, I was photocopying stuff. I was scanning stuff myself. I was binding books on my own.
Yeah.
Even at that level, right? So I think it's a way of basically getting your foot through the door. It's a way for you to learn the business firsthand. And I had the beauty of having to work with some of my juniors who kind of worked into my team, some of them interns. I think they have learned quite a fair bit. I always tell my people that basically, look, stick around 1, 2, 3 years, and after that, someone is going to value your relationship, your expertise.
Yes.
Because it's a small industry.
Absolutely.
Right? And it's growing very, very quickly. So there's always going to be a shortage of people.
Yeah.
So all you need for the first 2 to 3 years is the experience.
Don't you think, though, a lot of people are in a rush? Because I speak to people that always talk about money, and obviously money is important. But I said, if you're chasing money, it's a race that you probably won't win. right? And in particular, in our profession, I think longevity, consistency, it's key, because think about this. So firstly, if you're a client, if your banker, investment advisor, private head of markets hasn't been through 2 or 3 recessions, what do they really know? Right? That's my humble opinion, right? And the other thing that I've realized is when you look at that person, you've got to think, if I'm going to pass them the baton, if I'm going to give them my money, I need to know that this guy's sound or this girl's solid. Do you know what I mean? So longevity, I think, is something you and I truly believe in. I just want to do a few rapid fire questions that I pulled together.
Sure.
Right? So skills, what are the most important skills for a private equity manager?
People skills.
Interesting. That's the number one, you'd say.
I value it the most, yes.
Number 2, number 3 beyond that? I'm just curious.
Like I said, track record.
Yeah.
You know, how have you done historically?
Because I was given a search the other day, and it's a senior role. And I said, well, the hiring manager said, we're either going to find someone with great people management, stakeholder skills, or someone who's technically brilliant. I said, well, which is more important? And he said this, because you could be the best practitioner in the world, but if you can't finesse the conversation, get it signed off, it's not going anywhere. And you'll probably be out of the job within 6 months, you know?
No, I think that's one of the most important considerations. And that's kind of the reasons why when I evaluate or diligence a manager, right, I would like to talk as many people as possible.
Yeah.
In order to learn, like I said, what their motivations are, how the firm the firm's culture is, how they remunerate people, and generally get a sense of how they do things.
That's so interesting. So you take a look behind the scenes.
No, I think you can't just look at it from the number standpoint. Like I said,
You can't.
It can be very deceiving.
And when you say people skills, give me a little bit more insight. What do you mean by that? Give me some examples.
The way they think, the way they interact with their juniors, the way they interact with their management teams, the way they interact with investors, I think it makes a lot of difference.
Yeah.
I kind of value earnesty.
Yeah.
Rather than kind of someone coming out and say, oh, I'm promising you 2.5x.
Yeah. And it's nonsense. Yeah.
When you know it's going to be hard to deliver, it could probably be done, but you need a lot of things to go your way in order to get done. So I'd rather you be a little bit more realistic. And I'm a big, firm believer of under-promise and over-deliver.
Yeah. You can't go wrong that way. Well, how do you help someone who's up and coming in the public sector today transition to the private sector? Because it's interesting. So the public sector, in my mind, in Singapore is actually very different from other countries, because typically Singapore attracts some of the best in class from industry, and sometimes private sector into public sector. But for those that are up and coming, you know, in their mid-20s, you know, to early 30s, what would you say is the key to moving to the private sector?
I think follow your dreams.
Yeah. Don't be afraid, right, to try.
To try something new.
Yeah.
Right? There are trade-offs, obviously, right? I think that the public sector obviously is more secure, it's more predictable.
Yeah.
But I think the opportunity to learn and grow is more on the private side than the public side.
Yeah. Good. Podcast, books, what have you read recently or listened to other than the Quintessential Questions podcast that you've learned from? Do you have like regular go-tos?
Not really. I'm not. I see a lot of books there. Unfortunately, I'm not a books fan.
How do you process? Are you an auditory person? How do you take on your reading and learning?
Well, I read enough in the office in terms of pitch books, in terms of information memorandums, and I don't want to go home and read more books.
Yeah,
right. But I recently got a new book at an event. It's quite interesting. It's called Conflict: The Evolution of Warfare from 1945 to Ukraine.
Wow.
It was written by David Petraeus, or General David Petraeus. I don't know whether you're familiar.
No.
He used to be the director of the CIA.
Okay.
He also led the U.S. forces in Afghanistan and Iraq. Wow. So he's quite qualified to talk about it.
Yeah.
And it's interesting, basically. He just analyzes what mistakes were made, you know, historically, and what mistakes are being made now, for example, in Ukraine, for example. So it was an interesting book.
Well, dispute resolution and how do you negotiate and deal with difficult people. It's at the forefront of our job, right? I've been in meetings, I'm sure you have, and there's raised voices, and it's like watching a tennis
We had 10
match,
courses for that.
Yeah, it's important. I'm highly dyslexic, and I struggled academically. And when I first met my wife, she was doing her conversion because she did her first degree at LSE in law. When she came back, she had to do a conversion into Singaporean law. And I thought, rather than waste that year, so I did 2 diplomas at the time, one in compensation and one in benefits. And then I realized that I wasn't doing enough to become a world-class practitioner in what I did. And I started asking people in my industry, at the time I was an HR consultant, what books have you read on sales, negotiation? And the funny thing is, no one gave me a list. And then I went back to my sporting background and career, and I realized, well, actually, to become really good at what you have to do, you've got to put in the work. So I just started gradually building at it. And I'm a prolifically slow reader, and it's hard work for me. It's a slog. But what I find is if you read about someone that you're interested in or an area that you're interested in, it's actually pretty fun. So I personally have enjoyed it, and I'll check that book out.
I got a signed copy if you want to borrow it.
Oh, really? You trust me with it? How did you get a signed copy?
He was a speaker at one of the events.
Really? Yeah. Please, I would love that. I'd be a bit nervous that I might ruin it, but let's do it. Advice. What's one piece of advice that you had wished that you had received earlier in your career?
I'm going back to one of the answers I gave earlier. To always ask, to always be inquisitive.
Yeah. It's funny that you talk about that because my son's got ADHD, and a few years ago he was struggling at school. And I said, look, I want you to engage with the teacher, because if you don't ask questions, they think that you're not interested. And, I think that's the key, right? Always asking. Although I've been told I ask things too often. So there is a flip side.
Well, like I said, the worst you get is a no, right?
That's true.
So that's fine.
Well, talking on that point, you're an introvert. And when I told you I was one, you looked at me like, no, you're not.
No, I don't think you're an introvert. I don't think, at least at face value, that you're dyslexic. It doesn't come across.
Yeah, I'm very, very, very dyslexic, like really badly dyslexic. So when I was, back in the day, it really wasn't a thing. And my mum spent some money to send me on a few quizzes back in the day. And I was getting C's and D's at school. And I really worked very hard, and but I had to learn to reread. And there was a special learning development center in my school, which was really quite progressive. And I was highly embarrassed going into that because it was right next to the main corridor. And I thought, flipping, everyone's going to see me. But when I went in there, all the boys that were bullies and thugs were in there, which was quite interesting. And unfortunately, most of them came from, single families. Maybe the dad was in prison, and that was interesting. But they, instead of being encouraged to really encouraging each other to go down that path, they just did it to mess around and goof off. And I had to learn to reread. So I struggled so badly that I've built in all these tools. But being an introvert, this is what I've learned. So being an introvert, it doesn't mean that you don't enjoy spending time with people. It just means that naturally it depletes your energy. And in our job, what I've learned is, because let's say on average, I have 5 to 6 meetings a day, minimum, external meetings. So it depletes my energy. So I've learned how to be extroverted in that moment. But then so this morning, before you came, I just walked around the park. That helps me just to process things. But thank you, because that's a compliment, right? But the other thing I think about introverts, most introverts always think, if I'm an introvert, then I'm going to struggle to sell or communicate with people. And I think to the contrary, because other introverts will, one fisherman sees another fisherman, so they'll be more comfortable with you. And extroverts are actually quite easy to sell to, in that you just let them talk, let them run with it, But as an introvert, how have you managed your career? Because it's not easy, because you're in a very public position, right?
Absolutely. I think I had to learn to adapt in a sense. So me at work is very different from me at home.
How so?
it's like when I'm at home, it's more quiet time.
Yeah.
You know, I don't interact as much. I don't go out socializing as much.
Yeah.
When I'm at work, obviously I have to do all those things, right? So again, not many people, if you ask my colleagues, I think not many people would think that I'm an introvert.
Yeah.
Just because I was in that environment most of the time, and they see me in that environment.
Yeah, I find it fascinating, and I think one of the things that I would share, like my son who's also an introvert, is how stamina and energy in our business, in any industry, is something that's massively overlooked, because you see a lot of people burn out. They're in a collision course in their career because they don't know how to remedy that. And like me, I very rarely go out socially and have a drink. And if I do, it would have to be with someone I've known for a long time, because then we can talk about whatever. There's no agenda. Do you know what I mean?
Yes, absolutely. So if you see me at an event,
right,
you'll probably be at a corner, talking to someone I already know.
Yeah.
Rather than trying to introduce myself to new people.
Yeah. Well, the other thing is self-discovery. So I'm 47 now, and I learned 3 years ago, probably, that I've actually always been afraid of confrontation, of difficult situations. But when I was younger, as a former athlete, boxer, I think I lied to myself, because like, how do you get in the room? Like when I first met you, I was so young, and before that I was always dealing with CEOs, and you have to almost lie to yourself to get in the room, right? And when you're younger, the reality is you can't be confident about things you've not yet accomplished. You can be confident in your abilities, but with my son's journey through, he was a Singapore amateur boxer, and one day he said, "Dad, I'm afraid. I'm scared of sparring," and I was able to then recognize that in myself, and it's very mentally draining. And that's the other thing about work, is when you're going into these battles on a daily basis, and you're presenting, there's money on the line, it can take its toll. You know what I mean? So I think as I've got older, I've learned to be kinder to myself, and I'm okay admitting those things. But that probably surprises you as well about me.
You need to probably balance a little bit of both, right?
Yeah, 100%. And I think if you're lucky and you're genuine, you're earnest, you make good friends along the way, and people will genuinely be kind. And if they're not, you just walk on, leave them behind. That's my take. How do you manage your own investments? Are you allowed to? What's the policy at BNP?
I think if you talk about public side, I think we have to declare, seek approval before we trade. So I generally don't do that. So my investments are mostly in things that I understand. So private assets, especially now, like I said, with this advent of semi-liquids, it's becoming more and more easier to access, even for retail clients, not just high net worth clients.
And how, because one thing I've learned is that kids don't listen to their parents, but have you sat down with your kids and gone through?
No, I don't think they're there yet.
Yeah.
I think my daughter is starting to get there, because as part of her journey trying to get internships and all that, there's this thing called commercial awareness. So she's starting to learn all about the asset classes, about bonds, about equities. So she's asking some of the right questions. So I think that's a good start in terms of how we...
And you can't force it upon them, because they won't listen. So they have to be ready, right?
They have to ask the right questions.
Yeah. Because I think, you could share that advice with them, but they won't hear you. But if someone else does, they will,
Well, they'll also say that, what money? I don't have any money for investments at this point in time.
Yeah. That's where people get stuck, right? That's where they, that's myself. It's like, why are you reading about books about money when you don't have any money back in the day? You know what I mean? But that's an interesting point.
No, even for myself, I think I started making investments fairly late. All right. There's always something more important to do with your money.
Yeah, for sure. Yeah, it's a really interesting one. I think that's the thing that I really struggle with, because I try and share with the kids, I try not to have any regrets in my personal life, but I said, look, looking back, this is what I've learned. Can you try and take some of this knowledge and run with it? And they just look at me like, what are you talking about, Dad? You've been there.
Sometimes they have to make their own mistakes.
They have to. What investment has been the most exciting opportunity that you've seen in recent years?
I'm going to come back to what I mentioned earlier. I think infrastructure.
That's the one. Okay.
That's the data centers. I don't know whether you know, but data centers is a little bit like real estate. Once it's up and running, it's just a constant flow of recurring revenue, and it's a long-term contractual obligation. So the downside risks are actually quite minimal.
Okay.
Right? Because once you have it up, you have a lease in place. It's a 15 to 20-year lease.
It's amazing. Yeah.
Right? And the tenant is involved, or is expected to bring his own equipment, maintain his own equipment. So a lot of things are not, as a landlord, you're not involved in a lot of it once it's up and running.
And which are the main countries you're seeing this in?
I think it's everywhere.
Really?
Yeah. I think, like I said, data centers are shortage of data centers worldwide.
Yeah.
And it takes a while to get up and running. And one of the reasons why there is a lack of supply is that data centers need a constant power source. And that's kind of the reasons why, if you look at data centers, they are measured in gigawatts.
Okay.
They're not measured in terabytes or petabytes, right?
Yeah.
So it's just the amount of energy available. So imagine if you locate a data center close to an urban city.
Yes.
And it's drawing so much power that you're going to have blackouts in the city.
Yeah. No good.
Right. So because data centers needs to be up and running 24/7. So they need a constant stream of energy.
Have you ever gone to the companies that you've been investing in, to their offices or their plants, to see them physically?
Occasionally, yes.
That's interesting, isn't it? When you get
Absolutely.
to see it, I find that fascinating. Yeah, because then you see what what's really going on behind the scenes.
No, as part of our due diligence, we tend to do that. But again, it depends on where they are. So a lot of our funds that we offered at BNP were either US or European centric. So I don't get to see a lot of that.
So when you get home, Royston, in the evening, what do you do to relax, other than getting up early on a Sunday morning to see me? What do you do to unwind?
I consume a lot of streaming services.
Okay. What are you watching at the moment?
The Voice.
Okay. So you just chill. I like to watch things that I switch off on, and I don't know about you, but my wife, her brain starts working at 11 o'clock at night. She's a night owl, which is, don't talk to me. I need to go to bed and not be thinking about work the next day. Otherwise, I'll be up at 4 o'clock in the morning. Do you know what I mean? It doesn't work. When you look at you're very humble, but you've achieved some great things in your career. What has been the key to that success habitually? What are you doing, daily in your routine to stay on top of things and ahead of the curve?
A good cup of coffee in the morning.
Okay.
No, I like I said, I think I'm in an industry, like I said, which is a little bit more longer, where it doesn't need to move as fast. So I like to break things down into small little hills that you can climb quickly, instead of seeing everything all at once and you see a mountain in front of you, right?
Yeah.
So I think that's why you break it down into more achievable bits.
Yeah.
And then you can have small accomplishments over time.
I'm just curious, when you've sat down with your bosses and had an appraisal conducted, or you've sat down with your staff and conducted people's appraisals, what's been the best approach that you've witnessed that you lean into?
I think going into appraisal is to be prepared, right? I generally think that if you want to come out of an appraisal in the good books, then you need to kind of showcase what you have done during that year.
Do you suggest pulling together a presentation? It depends who your boss is, I guess, right?
It depends on their style,
Yeah.
but I generally do it through bullet points.
Okay.
I think it just kind of refreshes your appraiser's mind of what you have accomplished, right?
Yeah.
He probably knows them, but he's kind of forgotten them over the course of the year. So this is kind of refreshing them a little bit.
Of
on
course.
what you have achieved.
I want your take on this, because I think, going back to your point about asking for things, so let's just say you're asking for a promotion, and I don't necessarily mean a rank, but you want to take on more responsibility, like you took on real estate, for example. I think there's beauty in asking, and if you don't get the way you receive that no, let's say it is a no, is fundamentally very important, because if you kick up a fuss and throw your rattle out of the pram, it doesn't work. But if you've asked in the right way, you've shown healthy ambition, you've shown vision. Can you speak about that, like asking for things and when you don't get it necessarily, how you can benefit from that?
I think for me, it's actually the reverse. It's like I've been given stuff that I don't want to have.
Really?
No, sometimes. But yeah, I think you're right. I think the way that you take that no is very important.
Yeah.
It also depends on the reasons why that person said no to you, right? And then if you know the reasons and you can work around them, then the next time you ask, the higher the probability of a yes coming to you.
Yeah. Do you think so many people in our industry, they focus so much on, like, for example, getting the MD title? And I always say to people, look, where you're at, if let's just say you're at BNP, it's director MD, but you're on the cusp of it. It's not a matter of if, it's just when, right? But the reality is once you get it, I'm not saying it's meaningless. You get it and it's recognition, but I think people chase those things a little bit too much. What do you think?
No, I agree with you. Just pay me.
Yeah.
Call me a janitor if you like.
Yeah. I'd prefer the money, because I always feel a good friend of mine said this to me as a CEO. He said, titles are free. The reality is titles are free. But in Asia, I always feel that
perception, right?
Yeah, is more important. They would rather, get paid a little bit less and have that, and I'd rather the money in my pocket, but that's just me and you. Inspiration, which figures have inspired you over the course of your career in terms of investment, management?
I had to think very hard for this. I think I'm more in line with Warren Buffett. Thinking long term, thinking businesses that will last the course, right? Keeping investments in things like Coca-Cola, for example.
Yeah.
It's never going to go bad. Right?
Yeah. It's amazing.
So longer term, rather than, if you look at NVIDIA, it's gone up like that, and then 600 billion off in one day just because someone else has a better model. It's crazy, right? Really incredible.
It really is incredible. I mean, I find the CEO of NVIDIA just to be very inspirational, though. How he set up the business from Denny's, and when he was, he talks about being a cleaner. I was a toilet cleaner back in the day. I don't know if you know that. I came from a very humble family. I had to maybe almost drop out of college at the time because I needed a job paying me regularly in order to help mum and dad with the mortgage. And the only job I could get was as a toilet cleaner in a hospital. And I think when you've come up, from a humble background, it's important to remember that, and then that keeps you
Grounded.
real. Yeah, grounded, 100%. And I'm always, I'm not religious, but whenever I see the foreign workers in the back of the trucks here, I always, send them a bit of love and positive energy in my mind, because I'm grateful that I'm not on a building site. My dad was a builder, and so I think being grounded is really key. In terms of decision making, when you're faced with a really difficult decision making situation, what do you do? Do you speak to someone at your level, somebody, the level above? Do you sit down on a piece of paper and do what I do, like a Benjamin Franklin model where you talk about the pros and cons? I'm just curious how you go into that process.
I think it's a little bit of everything. I would take into consideration what my peers or my superiors will think.
Yeah.
But ultimately, I think it's down to probabilities, right? You want to take the course of action where the probability is in your favor. I tell this to my kids, like I said, I won't bet with you unless I think the probability is in my favor.
Yeah, for sure. That's what I was telling Isaac. I said, if I make a bet with you, you probably shouldn't take it because I don't want to lose any money. So I've thought about this.
So my kids are very, very scared when I want to make a bet with them.
Yeah. Have you ever lost a bet to them?
I did.
Did you?
I did.
But, if I don't know if you've read Ray Dalio's Principles, but he breaks down his thought process behind everything and decision making. It's really interesting. And I think at the highest level, how you process any information is really important. And I think in our business, even in a one-to-one conversation, if you are impetuous and you say the wrong thing, it can backfire. So you have to go through, I call it rational deductive logic, to find those answers. I find that interesting.
Sometimes decisions are out of your hands, right?
Yeah.
So when you can make decisions, I think you need to do it rationally.
Always. If you were not in your current line of work, and going back to what, earlier when you were finishing up your masters, if you were to do something else, what do you think you would have done differently or could be doing differently?
Well, it's one of the reasons I left BMP, to be fair. I think I have always thought that as a second career, I could go into teaching, kind of imparting what I've learned over my expertise over the last 20 years or so. Given the fact, like I said, is that there's not a lot of information out there in the private asset space, right?
Yeah.
So it's still evolving.
Yeah.
I think teaching would probably be...
It's meaningful as well, right?
Absolutely.
Yeah. So interesting. Talk about future goals. I mean, without going into too much, you're starting a new role, but, life, career, what are your future goals going into this next chapter of Royston's life?
So this new role, like I said, is also a good way of transitioning to that goal of going into teaching. So it's a little bit more training oriented. I believe it's kind of passing on some skill sets rather than doing it myself. It's basically passing on that knowledge to someone else so that they can do it. So that's kind of the reason why I've kind of left a BMP. Otherwise, I would probably have retired there.
For sure. Well, Royston, listen, it's been an absolute pleasure. Is there anything that you want to ask me or any final things you wanted to share?
No, I think it's been pretty comprehensive list of questions.
Yeah, we've gone through a few good ones. But looking back, I mean, it's been a privilege to work with you. And I'm looking forward to this next chapter because big things lie ahead, no doubt.
It's been a journey. I think there's still some way to go.
Yeah.
So let's see how it ends.
For sure. Royston, it's been a pleasure. Thank you.
Thank you, Paul.
Cheers.
Thank you for having me.
Thank you.